when Mike Bellafiore and others say that it's like being like a professional athlete, it really is. Like getting in the reps. You see the guys that put in a lot of reps on the weekend. You see how they're in the trades faster. The equity curve is proving it. There's a lot of great traders who share, like Kulamagi, Lance, the people are online, they're sharing their strategies. So start there, build out your data. I think there's three things that stick out for me. One that I learned from Lance is,
hello and welcome to the Trader's Journey for Investors Underground. In this episode, I get to sit down with Abdullah Rasheed, a former software developer turned full-time trader, mentor, and founder at ProfitX, whose goal is to help aspiring traders develop and refine their strategies. Over the last 5 years, Abdullah has built a logical, disciplined approach to trading. In this episode, we'll discuss how Abdullah went from trading primarily Forex and futures to trading stocks, how he built a playbook of 8+ high probability setups to trade, how he's learned specific lessons and applied them to his trading after interviewing elite market wizard level traders, and so much more. It's my pleasure to introduce Abdullah Rasheed. Hello, Abdullah. Thanks for being here and welcome to the show.
Thanks a lot, Anthony. It's an honor and I really appreciate you inviting me.
Absolutely. I've watched your content for the last few years and we got to meet briefly at Traders for a Cause. I think it was last year, maybe the year before that. And, I thought to myself, we got to do something. I would love for more people to hear from you. So I'm glad you'd be willing to come on the show and speak to me and let the audience hear.
Yeah, definitely. I really appreciate the invitation, and Traders for a Cause event was amazing. It was my first time there. Met a lot of great traders, met some traders that I've looked up to for a long time. And I've been watching your channel since the beginning of my career. So it's sort of, it's amazing to actually be here and be interviewed, so it's sort of one of the unexpected things that happens as you start to take a path, you start to, go after things that you want to accomplish. You never know where you can land. So me being here, being interviewed by you is, it's amazing. It's an honor and something that I never even thought that would happen.
Well, thank you so much. And yeah, absolutely. To echo that for a minute, going to Traders for a Cause, getting to meet all sorts of traders who you only see online and they get to meet them in person, ask them a ton of questions. It's always just a great experience. And, that's one of the things that brought us together. So here we are.
Yep.
Abdullah, if it's okay, I'd love to go to the start of your trading journey. So how did you first hear about the stock market and this world of trading? What was that like for you?
Yeah, so actually it was my younger brother. So in 2019, late 2019, before COVID, I was working as an engineer, a software engineer, and my brother and I worked for the same company. And I was just like many people trying to find something better. Software engineering was paying the bills. I had worked my way up in the company that I worked for. I was making 6 figures at the time, but I was capped by, like the 3% raises that they'll give you. So I would work hard. I did everything I could to excel in my career. And I'd come to the point where I realized that if I didn't start my own business or look for something that had more earning potential, then I'd be pretty much stuck, maybe, relatively, right? So maybe if I become a VP or CTO of a company, then I could probably make, 300K, 400, 500K. Maybe if I became a CEO of a company, maybe higher. But what I could see for my near future at the time, it was just capped, right? So I had been looking for other ways to make money. Started several businesses, and from products to my own SaaS company. And those didn't really work out, but it was all a journey. Like certain skills that I had learned along the way were just stacking, right? So my brother and I, we had started a company. It had did well, but we ended up, dissolving the company because we decided to do something else. And 2019, my brother, he found the stock market, and he had been trading for about 2 years. And we had a group chat like for a family. And all of a sudden, like, one day after work, he just posts a Robinhood screen and he had made $30,000. And all of a sudden it was just disbelief, like curiosity, all these feelings hit me because it's like, all right, little bro, like what happened, right? How did you make 30K? So he had started explaining how he was finding these like penny stocks or companies that were undiscovered, like these. I think one company may have been like SPCE, like one of those companies where they had some tech and they were early, right? And he put like 3K in the company, and then it had went to 30K, right? So he bought it like it was like pennies, and then it just gained like a few dollars, right? And he made a lot of money. So I said, okay, I'm very conservative. So I have to see something happen a few times. I need undeniable proof, or else I won't move. I'm just like, okay, I have a family. My income is consistent right now, so I'm not going to do anything until maybe I see some more income come or more profits. So then later on, maybe about a month or two after that, he made our annual engineering salary in 1 month. So I was like, so once that happened, I was like, whoa, blown away. And he actually put in his resignation. We were working for the same company. He put his resignation in, and he went and bought like a condo here in Houston where we live in the Heights. So I'm like, normally when you quit your job, you go into like safety mode, but he had quit and he went and bought things, right? So I was like, okay. So immediately I contacted one of my friends who traded Forex at the time. He had told me about it. And so from there, I started learning with him. And since I'm the bigger brother, I kind of had to find my own path, find my own way. And I ended up trading Forex, starting with Forex instead of stocks, regrettably, because that has its own story that I'll tell. But yeah, it was my younger brother who introduced stocks to me. So, and it was just like one of the things where I've been searching for something. He'd made money, and that's what caught my attention. I trusted him. So yeah, that was my introduction to trading.
That's incredible. It's always really exciting to see the potential of stocks, especially when you are in a career, you have a safe salary, just to see what is possible on that other side. Did you ever think that you would be able to quit your job and have a sustainable career as a trader? Like, was it something that you thought right away might be able to happen? Or did you give yourself time to grow as a trader and then eventually, leave sort of the corporate life and software engineering for trading?
Yeah. So definitely gave myself some time to save up and to prove. But from the instant, because my brother did it, I felt like I could do it. We're pretty competitive, and he's my younger brother. So I'm like, if my younger brother can do it, I can do it. So right away. And I think it's a gift and a curse, that sort of ambition and confidence, because I started to learn Forex trading with my friend. And like everyone else, he told me, hey, look, start off in the demo. And immediately I loaded up my account with 10K. And I believe within the first week, I had lost 5K, right? Lost my 50% of my account. And I remember the first trade, we had joined a call, and it was sort of like a multi-level marketing company that I had got introduced to. The education was bad. It's nothing about him. He was just a part of a company. He's a great guy. But I took some courses and they were just basic. Man, looking back, it's silly. I mean, it's silly the type of education that I thought I was getting, and it's silly to think that I could make money based off of what I had learned. It was just basic stuff like support and resistance, trend lines, and we were all trying to take these signals. So right away, I load up my account. I mean, the first day after I learned how to press some of the buttons and buy and sell, I think I didn't know what I was doing. I didn't know how to calculate my position size. So it was an indices trade, and like what would be equivalent of your Qs, right? The Qs. And this was Forex, so it was CVD. It was CFD trading. So it was US 30. I remember just pressing the button and getting in, and then just within literally about 27 seconds, I had lost $1,000. It was, I had never lost so much money in my life. And it should have been a red flag, a stop sign for me. But I was just so, man, ambitious and so excited, about it and I couldn't believe it. I said, okay, no, maybe I just made a mistake. So, just day after day within that first week, I was just losing, man, just getting hit. And that right there, after I lost that 5K, it's two things. One, it happened so fast that I didn't really realize I didn't process what happened. But two, it just made me want to learn more. Right. So, I'm the type of person that likes to problem solve. If I get knocked down, I'm going to get back up. So I look for education. I joined another institute, a school. And then from there, that's when I said, okay, let me treat this like a business, a profession. When I was as a software engineer, when I came into the field, I read everything that I could read on engineering and coding. So that's what I set out to do. I said, okay, I'm going to read everything I can get my hands on in regards to trading. And I think one of the first books that I read was Market Wizards, the first edition by Jack Swagger. So that really helped me out. And then the second book I read was Trading in the Zone. So those are two books that really helped me put in perspective what was necessary to be successful in the field. I was still missing out on technicals and understanding volume and order flow and those types of things, but at least I had understood how serious I had to be in order to become a profitable trader. So those two books, they helped me. Then from there, it was all just, okay, how can I put together a roadmap that, like my roadmap to quitting and making money, right? So from there, it was just, joining one school to another, to try to put together my roadmap. And then once I had the roadmap, then, I just had to work it. I remember talking to one mentor trader. I'm like, hey man, what's the shortcut, right? Like, what can I do to bypass a lot of what other people go through? And he's like, there's no substitute for the work. Like once you have proper knowledge and proper education, there's no substitute for the work. So just to answer your question, man, in the beginning, it was like, I can do this. I was confident, overconfident. And then once I had the roadmap, it was like, okay, I could really do this, but it was going to take some work.
If you're looking for ways to take your trading to the next level, Investors Underground might be able to help. You'll have access to courses and mentors to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms where you'll find a vibrant community of focused traders who share their trading ideas in real time each day. Members also have access to the morning broadcasts where the IU moderators share their trade ideas for the day ahead during the pre-market session. Members have access to the midday study sessions with Stan, the midweek study session with Sam, webinars, moderator watch lists, and all the other tools and resources that Investors Underground has to offer. Listeners of The Trader's Journey can access exclusive membership deals available at investorsunderground.com/journey. And now, back to our episode with Abdullah Rasheed. Yeah, I think that's powerful. There is no shortcut to this in trading. You got to do the work. You have to experience it. What, if anything, would you tell your younger self, in terms of what you know today to try to get you more knowledge faster back then? Is there anything that you could have told yourself that could have, helped you maybe back then?
I'd say it was three things. The first point, I don't hear a lot of traders on that come on speak about this, and it could be it speaks to the avenue that I came through. So I was on Instagram, scrolling, looking for mentors, and the first year and a half was me just experiencing bad mentorship, bad advice, right? And trying to apply it. So one of the first things I would do is I would advise my younger self to, hey, find legitimate people. That in itself is a step, right? I remember being on a call and this guy, he said he called it the 3-wick strategy. So if there was 3 wicks on the chart, then it was like an entry pattern. I mean, he just made it up. Totally, just totally made something up. So maybe the first 4 or 5 mentors that I had, putting my friend aside, they were all just, kind of guys kind of grabbing money, flashing cars, flashing Lambos, flashing Ferraris and things like that. And just unfortunately, misleading people, what we would call furus. So the first thing would be to find legitimate people. Then the second would be to take more time ensuring that you have edge, like understanding edge. So in the beginning, a lot of what I was doing was just looking for patterns, looking for shapes on the chart, right? But as I started to understand, that you have to start to process, what gives you an edge within the randomness, so why certain things work, proving that your strategy works. All of those, like taking that time is important before risking any money. I mean, everybody says it, but that 5,000 that I blew right away, which ended up being 10,000, and then 15,000. That tuition that I paid, it was unnecessary. Had I just taken time to prove that I had some edge. And then the third thing I would say is, give yourself, time with small size to build consistency. I think one of the first moments that I realized that this could work is after I losing so much money, I just pulled all my money out and I said, okay, let me just start off with $100. And since I was trading CFDs, I wasn't trading stocks. It would have been a lot harder to take $100, right? And trade it. But since I was trading CFDs, I took $100 and over 3 months, I had grew it to $1,000. So during that time, I had like a 65% win rate, maybe like a 2.5 R average. And I actually built the system. I had data, my entries and exits and ideas were structured. And it was during that time that I realized that, okay, hey, if I could scale this, then I could make a career. So I think, just kind of recapping is just like, find legitimate people. The second is take time to, build the data, gather data. You should have undeniable proof. Like I have thousands of charts, and then, give yourself a time with a small sample, right, to trade, and build consistency.
Those are great steps for people to think about. Do you even have edge? Are you trading the randomness? I think that's a really big one, and we could probably do an entire episode on that alone. But yeah, definitely great advice for people to consider there, especially when they first start trading or they're not finding consistent profitability. So very powerful advice there. Abdullah, would you say that your background in software engineering inspired you or kind of directed you at all in your trading? Was that helpful in some ways for your trading, or was it kind of a skill that you weren't using in trading?
Yeah. So in software, so there's 2 skills that I had, that I've learned building software, that helped me with trading. One is process. So in One Good Trade, in Mike Bellafiori's book, which is one of my favorites, by the way, he emphasized that we're not trying to make profits. We're trying to follow our process, right? We want to build a solid process, and if you follow the process, then the profits will come after, right? So in software, I build hundreds of systems, I build hundreds of processes, some that work, some that don't. You have to go through this sort of like trial and error, right? Software itself is just, you're building up a process, you're building up systems, and then you analyze them, you test them out, And the things that work, you keep. The things that don't, you throw away, right? Or you put on the shelf. So that's sort of like, that helped me out when it comes to building a trading system, right? So with any system, you want to look at not rebuilding or reinventing the wheel. So everything that I have right now, I've almost pretty much adopted from profitable traders. So at first I was just kind of, trying to invent something. But then I realized that, hey, if people are already making money, there's no reason for me to try to, invent something when I have no, historical references. So everything that I have right now, I started off, watching profitable traders, learning from profitable traders, and they had a system. And then the things that worked for me when I back tested them and reviewed them, those are the things that I kept. And the things that didn't work for me when I actually traded those systems, I didn't keep, right? So I think the systems thinking, the process thinking is something that really helped me out. And one other sort of like a cheat code is when I'm gathering data, since I know how to code, I wrote a program that I generated charts for 5 years, right? So Python program, I used one of the APIs from Polygon, and I went and fetched the gainers in the pre-market for top 10%, like they were up 10% with a certain amount of volume. And then I generated the charts, and that helped me when it comes to backtesting and reviewing scenarios, right? And then I was able to calculate how often certain scenarios work out versus how often certain scenarios don't. For example, maybe over 80% of the time, top gainers and gappers that run up, like those small caps, they're gonna revert all the way back down to where they started, right? So if I'm playing the long side, I have to know that, maybe post market, like when the market opens, that's when these small caps are likely going to eventually start to fade off, right? So just having that data and those statistics help out when it comes to building an edge and building a system. So that's one thing. And then the second thing is not being afraid to let something go, right? So oftentimes in software, if you may see, if you just look at, Facebook and IG and even YouTube and these systems that we use, typically you start off with something and whatever you start off with, it looks different, a year, 2, 3 years, 2, 3, 4, 5 years later, environment and context, new information, all those, there's several different variables that will change how you look at things, right? And I think that as a trader, that's something that has helped me out in my journey. So I went from trading Forex, CFDs, trading my own account. I did that $100 to $1,000 challenge. And then I said, hey, how can I scale this a lot quicker? Then I found eval companies. And when I traded eval companies, that's when I started to make, big amounts. And that's what led me to leaving my job. And then from there, after I had some success, different things happened, which I can talk about if you want to hear about it. And it led me to trade futures. Then I went from futures to stocks, right? So just constantly evolving my system, my process, and what I'm doing. So I think those are two things that I gained from being a software engineer.
One question I had was about the difference in trading Forex versus futures versus stocks and equities. Are there particular differences and similarities between trading each of those instruments, or are they all sort of their own beast and there's not much?
Well, in the beginning, I thought that they were very different, but the trades that work for my style, they all have shared traits, shared variables, shared characteristics. I think edge in all of them, having edge in all of them is constituted of the same things. Like you have higher interest, more volume, you may have a catalyst. But the difference between the three is that individual stocks more often have catalysts. They have, more volume. It's more information. So when I traded Forex, since Forex is, you're comparing two currencies, right? So you may have the US dollar versus the Japanese yen. You're playing a game of relative strength. And a lot of times there are more ranges. You may not know why certain things are happening. Like if there's a tight range and maybe the currency pair breaks out, you may not have a trackable reason why, like something you can point to say, hey, okay, I see why this thing is breaking out, because it's two currencies. So it depends a lot on macro, right? So what the Fed is doing, interest rates, inflation. It may be, if it's a currency that is tied to a commodity like the Canadian dollar, or like maybe you have one that's tied to oil, you have one that's tied to metals, right? There's a lot more to take into consideration when analyzing Forex pairs. Then if you move into futures, which most people in futures, they trade indices. A lot of them trade indices, a lot of the retail traders, or maybe commodities like gold or silver. When I'm trading the Qs or SPY, since there's so many stocks that have to be considered, right? It's a basket, like 500 stocks or 100 stocks. There it's a little bit better, but even then, individual catalysts are diluted. Like the impact of individual catalysts are diluted there, right? So you need something like what happened earlier this year, where Trump with the tariffs, right, at the beginning of the year. So you see indices, stocks are plummeting, right? Indices are plummeting. That's when it's easy to trade those. But when the market is a lot more stable, you have more ranges with the indices. It's a lot harder, and I believe people get chopped up a lot more. So what stocks gave me was the ability to search the entire market, like day to day, looking for my setup, right? And almost every single day, I have a setup. I have something that has fresh news, something that has elevated RVOL or high float turnover. And for me, it's more efficient. Like the capital is, I'm putting my capital to use. I'm putting my time to use in a better way. And for me, there's just more signs there, right? There's more signs that an individual stock is gonna go day to day versus something like a commodity or a Forex pair. So that's the main difference. And then the second, I think the next difference will be the efficiency argument, right? So the Forex, I believe that a lot of the impact of news is just arbed out a lot quicker, right? So maybe something like CPI or PPI, one of these announcements that may make an index spike, or a currency pair spike. A lot of that is almost, the edge there is almost immediately arbed out, right? But something like like we saw with LIDR last week, or SoFi, our earnings plays like Shopify this morning. A lot of those like announcements, there's going to be price discovery after, and that price discovery can be intraday, it can be 2 or 3 days, it can be a week, it can be months. Like if you look at the quantum names from this year and last year, look at energy names like OKLO and SMR and NNE. That price discovery just lasted for a long time. If you look at DJT, like before Donald Trump was elected, we were trading DJT just like that was just in the game plan day in and day out. So the price discovery lasted for quite a bit of time. You look at like the crypto related equities like Mara and Coin. When crypto is booming, then price discovery there can last for a few weeks. So yeah, I think that's one. And then one more thing about stocks. I feel like there's a lot more creativity, in my opinion, because there's so many different sectors become hot, different themes become hot. There's different ideas when unfortunate things happen in geopolitically, right? Prices of oil are going up. Energy names, like energy names. We were trading these energy names that I never traded before, but because of the correlation of events, you get creative and you have more ideas. So yeah, that's why I kind of love it when it comes to kind of love about stocks. So
there's so much creativity that goes into the stocks that you choose to trade for that particular day. You know, if there's sympathy stocks tied to them or an ETF that you're also watching at the same time, you know, there's so much that you could be looking at for stocks. One of the questions I have, Abdullah, is about your trading strategy, especially over time. Can you talk a little bit about the evolution of your strategy itself and, you know, where today in 2025 you're finding edge in the markets?
I started off trading from the higher time frame, and the reason why is because with Forex and indices, I believe that a lot of times in the beginning, when I started from the lower time frame, I'd be trading a lot of noise, you know, a lot of market noise. So I once I started to so I started off like with the 1 minute, 2 minute, 5 minute. And when I zoomed out on the daily 4 hour time frame, I'd see that a lot of times I'd just be trading within a range. There was nothing special going on. But as I started to, I think maybe a year in, I started to use a higher time frame because I could catch a trend, right? It was just very basic trend trading. And after reading One Good Trade by Mike Bellafiore, I started to incorporate news catalysts. So I was primarily technical, and I started to incorporate news catalysts and fundamentals. And then I read Technical Analysis Using Multiple Timeframes by Brian Shannon, and that helped me understand how to incorporate multiple timeframes. So about a year and a half in, I was trading eval firms, and most eval firms are restricted to indices and currencies and commodities. I think there's one company that will allow you to trade stocks, but I wasn't aware of them at the time. So most of my trading was primarily based on, macro events, large moves. So I'd watch out for, Fed cutting rates, raising rates. I'd watch out for CPI announcements, anything that impacted inflation. I'd watch out for geopolitical issues, like, we have geopolitical conflict. I may trade gold, right? But I'd be looking at higher time frames. So maybe there are tight ranges and we have breakouts of the ranges, tight ranges and breakouts and retests of the ranges. Or we may have like a panic, and I'd be trading the other side of that panic. So that was primarily what I was doing. And I wasn't taking a lot of trades. I probably would take about maybe 5 to 10 trades max per month. But it was just the eval companies. They would allow you to, I had multiple accounts with these eval companies. So I had, like, at one point about $2 million in trading capital. It was all sim. They would pay you out. But with that, I could make, 10, 15, 20K in a month. Just in only trading like 5 to 10 high quality A trades. And at that time, I actually had A plus, B, and C trades. It was all, I designed a playbook based on Mike Bellafiore's advice in One Good Trade, and I read the playbook. So at that time, even though I wasn't as sophisticated as I am now, I still had built up a playbook. I had a routine. I had process. I just wasn't trading a lot. And my indices plays that I traded, they were all based on, macro news. Like, even if one of the big tech companies like Nvidia or Apple or Tesla, if they had news and that stock started to drive the market, I would trade based on that, right? So there were times I remember, like, maybe it was February, I can't remember which year, maybe it was last year. Nvidia had like blowout earnings, and it gapped up, and I traded the Qs based off of that. So I had already started to incorporate the catalyst type of news driven trading into my playbook, but I had just stayed with where I was at because I had more capital to trade with the eval firms. And about 2023 September, so September 2023, in the eval space, there was a big blow up. One of the major companies that was providing these sim accounts, they had been sued, and I think it was what's the governing company who governs like securities, the FT. FCC, yes. So the FCC, I think they had someone on the inside, and
SEC?
they had like blown a whistle on what they were doing. So like the profitable traders, they would start to sabotage them after a while, because they, of course, like if they had to, the profitable traders, they were basically, if no one knows, I think everybody pretty much knows how they work, but the unprofitable traders that pay the fees fund the profitable traders pretty much, and then the company just they take the delta as revenue. So I had all these, I had payouts with these eval firms. I'd done interviews, and I was all in on them because I didn't know what was coming. But a lot of these companies started to get investigated by the FCC, and they started to take these accounts away and shut down. So there were companies that were doing like 150 million a year, companies doing like 300 million a year in revenue, making like 10, $20 million a month, and paying people out. They were paying out like traders like 5 million, 10 million, like $5-7 million a month. So I was trading with those companies, and in September, about 5 of the companies I was trading with, they all went down at once. So if you imagine, I have like $2 million in capital that I'm trading with, or in sim capital. It's just the buying power. It's the perception of buying power. All these companies start to go down, and I had already quit my job that time. I think maybe like 2 years up to that time. So all my trading capital was invested in these companies. So I had to pivot quickly. So I went from CFDs to futures, and when I went to futures, you couldn't hold trades overnight. So I had to start to develop my lower time frame playbook. But the benefit of futures was that I could use order flow, because the order flow was a lot better with futures. The volume was a lot more pure with futures. So I started trading from the lower time frame, and that's when I started to build my scalping playbook. So I started to scalp, started to go into the futures eval companies like Apex and Top Step and these companies like that. And I gotten close with Lance, and I had started to meet the guys from SMB. So having private conversations with them, they were just like, I'm like, hey, why don't you trade futures primarily or Forex? And I remember one of the guys, I don't want to mention his name, he said, one of our top traders, like if one of our top traders traded Forex 24/7, they wouldn't make money. And he had said the guy's name. This guy is like a multiple 8-figure trader. So it had hit me like, okay, when I was trading Forex and futures, I didn't have a lot of trades, right? As I mentioned, I would trade 5 to 10 times a month, right? Higher time frame. I realized that if I wanted to and at the time I had lost the capital, a majority of it, and I had my personal capital to trade. So I said, and I relayed that how much I had to some of those traders, and they're like, dude, like with the amount of money you have, if you traded stocks and you kill it, right? You be able to make the money you want to make. So I said, you know what? I've already been training to trade for stocks, learning from SMB Capital, learning from these top stock traders. So I said, okay, you know what? I'm just going to go all the way in on stocks. So when I went into stocks, I had already started that scalping playbook, and I just built a lower time frame, primarily lower time frame playbook. So I still trade swing. I still do swing trading. I still trade higher time frame, but that's only a small percentage of my playbook. I'm mainly scalping, and I'm doing momentum trading, news break, with news releases, and continuation. So that's mostly what I'm doing, mainly on the long side as well.
Would you be interested in showing the audience and explaining to the audience what one of your maybe A+ trades, or a trade that you think is really representative of your style, what that looks like?
Yeah. So I form ideas in 3 ways. One is by themes and sector, right? So if there's a hot sector or a hot theme, then I'll look to form ideas there. So that's one. The second is just from the top 10% gainers and gappers. If something appears, something pops up on the scan, I'll look to see if there's a catalyst, if there's high float turnover, or higher than normal volume, then I'll look to trade it. And the third one is just higher time frame trending, right? So I'll go through like one of the just kind of like easy money plays, where it's kind of like a one that I'll take like day to day if I have something like this pop up. And then I'll show you one that is more of like a bigger picture. Okay, so LIDR, this one happened last week actually. So LIDR, I was looking at the scan, and around, this is around 8 Eastern, LIDR pops up as one of the top gainers. And immediately, I think I see it around, when I take these momentum types of setups, I'll trade them from the 1 minute. So show you where I saw it. Okay, so LIDR, it pops up on the scan, and at the time it is about, probably above 70% at the time when I see it. So this is probably where I caught it, where I saw it here. So I have a quick way of finding a news catalyst, like seeing if it has a catalyst. I built it into my process so I can quickly check. And they had a partnership with NVIDIA. So at that time, I'm taking into consideration that, NVIDIA, everybody's bullish NVIDIA pretty much. AI and tech, everybody's pretty much bullish NVIDIA. And sometimes these stocks that have press releases, if they can attach themselves to a bullish sector, bullish theme, bullish name, then they'll benefit from at least an intraday run, right? Or maybe even just enough of a rally for me to take a small momentum play. All right. So LIDR is one of those. So before I took it, I just had all of these kind of things in mind. And then once it popped up, I saw that they put out a press release about their partnership with NVIDIA. So this was more of a breaking news. It popped. And then from there, I'm looking at, so here, I'm looking at the volume. I'm looking at the float. And I want to see high float turnover, right? Like 2, 3, 4, 5x turnover. And this is one of the first entries here for me where I see it pop. I want to see if the bids are stepping up here, and if the buyers are more aggressive. So I'll typically use the 9 EMA, VWAP, the standard volume indicator. Sometimes maybe Bollinger Bands. To see how extended something is. And what you see here is the cumulative volume delta. I use this for a lot of like the people in my pod, because the cumulative volume delta, it'll show the delta of the aggressive selling and aggressive buying delta, right? It'll plot it over time. So what you'll see here is it sort of acts as like a visual of the tape. It's not the tape, but sort of a visual of the tape, because you could see if over time the aggressive buyers were more dominant than the aggressive sellers. So typically, what I want to see is something like this, but on the tape, right? So what I'm relying on is price pops as it pulls back. I want to see if the bids start to step up, and I want to see the tape lighting up with green, and there's the ask isn't heavy. So from there, after seeing, I'm looking at the scan, it has a news catalyst. Then I'll resolve to price action, volume, and the tape from there. So I'll typically enter these on momentum. As momentum starts to die out, I'll start to scale out, and from there I'll hold as long as I don't. It's kind of like a prior bar low situation where as price breaks the previous bars, then I'll start to scale out like a 50 at the first sign of a momentum dying, a 25, and that last 25 I just kind of let run. And then from there, if I have more sideways consolidation, like tight consolidation, I'll start to look for more entries. So from there, I'm just looking for like the stair stepping, and I'm just entering more as long as volume stays elevated, the tape remains bullish overall. And around as around the time when the market starts to open, if you remember, I said that over 80% of the time, like based on the data that I have, like these pre-market runners, they eventually short off. I'll enter them at the open. Most of the time, I won't take like the opening range breakout on these. I'll typically wait for something like if it breaks up and holds the prior highs, then I'll look to participate. But I typically won't take the opening range breakout because a lot of times I've been faked out because it'll start off, it'll spike up, and then we'll have the start of that the backside, right, on these. So if I was a short trader, I think I'd do pretty well, but I primarily just go long. So I'm looking for the same exact setup. So it's that flag, ascending triangle, pennant. I'm looking for the right conditions for that, and I'm trying to catch that front side. So that's like the easy money, quick scalp type of play that I'll take on a just like day to day that I'm looking for. So I can walk through like a bigger picture one where multiple things start to compound, and this will be more of like A plus. This is more like my B setup. I'll add and I'll do multiple B entries, and I'll get more out of it by multiple entries setting up. But I'll walk through something that one of the trades that I'll classify as a more of like an A setup. So for like my A setups are normally supported by news, a strong catalyst like earnings. Earnings are my favorite. Earnings are one of my favorites because a lot of times when earnings come out, you have an earnings surprise. You can quantify, or you can connect, the surprise to the outcome, like by looking at data and looking at charts. So a lot of times when there's a blowout earnings, a company does very well. That coupled with the gap, right? It gaps up overnight and you have a lot of pre-market activity. Those are all signs for me that, there's interest. And at that point for me, it's just applying technicals and looking at order flow and tape. So I really like those types of setups. So we traded APLD at the end of July, and I traded it multiple times, coming into this month as well. So APLD, just from higher time frame, decent chart. And we had several times where, price was ranging here around this 963 level. And price it pushed up, we pulled back, it ranged, broke below, pulled up, out of that range, pulled back. And then we had earnings come out and we had the gap out of that range again, right? So that this range here, price kind of like kept struggling, pulled out and pulled back in. Earnings broke us out of that range. So that gap there, here, and I think the gap was about, it was a pretty big, I can't remember exactly, I have to measure, but I know it was more than 10%, more than a 10% gap there. So when you have such a big gap, that's one thing that I'm looking at. We had the earnings and it had several other catalysts as well. So what I would start to do is, look at the big picture. I'll look at it gapped up, and then in the pre-market we had a lot of activity as well. So then I'm going down to my lower time frame, and I'm watching the volume, and what I'll be looking for is most of the times on the earnings plays. Rarely will I enter pre-market. If the tape is moving, the volume is already elevated in the pre-market, I'll enter. But I was basically waiting on that opening range breakout. So typically, like the bulk of my trades on earnings plays are opening range breakout. All right. So in the pre-market, I'm looking for these levels, right? So I'm looking for levels, sort of markers, so that I can structure a trade. So price is ranging here, breaks up. We have a pre-market high here. Price. This is all before I'm trading at all. Anyways, I don't start until 7 Eastern. So when that volume comes in 7 Eastern, price breaks down, hits VWAP, struggles. So at this point, we start to see weakness here. But when all the shorts would likely start to come in on this breakout, price reverses. We have a VWAP reclaim, and then price starts to try to break out of the pre-market high. So it fails here, which is okay because I'm not looking to get involved yet. But what happens is at the open, so now I have a clear resistance here. Basically, I have clear resistance. So basically what I would really like to see is price break down here. You get the shorts in, right? And then we have a hard reversal. That is one thing that I just get excited about when I see. So price breaks down aggressively, have aggressive selling, and then the buyers just rebid and they come in hard, very aggressively. And this one I start to enter here, start to kind of like multiple entries. Price pushes back down here at 9 EMA and VWAP and holds. And I enter more entries here. So this is like my A setup. Everything just lining up. We broke out of that range on a daily. We gapped up from earnings surprise. Also, there were some other catalysts I can't remember at the time. Just kind of more news to stack up. And then we have pre-market activity. We had that fail breakdown, and then that's when I just start to enter. I'm scaling out, and whenever I have this as a momentum trader, I'm always looking for this tight consolidation, or like the pennant, right? If ever I have that happen and the buying aggression remains solid, then I'm adding entries there, right? So that's what I'm looking for. So so this will be one of it's a brief trade, but because of everything that lined up before it happened, I'd be looking to size up here, and size into and continue to add as it works. And then, I don't know that it's not going to work, but here I think around once I start to scale in, I'm looking for more sideways action. Then as it starts to curl over, that's when I just start to pull out of it. I pull out, and then I'll start to look for price to consolidate again and start to break again to that upside. And then I'll trade these types of trades for multiple days, right? So I have a second day play, which is this one gave a second day. I'll just look for that trend to continue, right, over the next few days.
Great. And what are some of the most common timeframes that you use? Is it the 1 hour, the 1 minute, 2 minute? What does that look like for you?
I'd say my overall analysis, I'll start with the daily and 4 hour, just to get, just to see the big picture. So that'll be like my trend time frame, like my overall trend time frame. Then I'll zoom into the 30-minute, and that'll sort of give me like a trend for like the day or like the last few days, right? I'm just kind of seeing what happened. Was it trending, or was the stock just sort of like in a range? And I'll mark out levels on like the 30-minute. So I'll have like support and resistance levels of interest for reactive trades. Then I'll look at the 1 minute and 2 minute. For the 1 minute, I'm looking, if I look at the 1 minute for small caps. So if it's low float, they typically move very quickly, and trading from the 2 minute for me on those, I'd miss some of the moves that I like to take advantage of. But if it's something that has a higher float, like, when I was trading quantum, like the QBTS, RGTI, those, I'll trade those from the 2 minute. If I'm trading something like NVIDIA or, Tesla or, higher float names, then I'll scalp those from the 2 minute. I'll give those tickers more time to set up and play out. So those are the main time frames that I'll use. If I swing, so swing trading, I'm using the daily primarily, and for entries on those, I'm using like the 5 minute, 15 minute.
Abdullah, thanks so much for sharing those examples of your trading and your setups. One question that I had as well is about your review, your journaling, and how you build a profitable playbook of, 8+ setups, and how you get that data, organize it so that traders listening can start thinking
Yeah.
about or even refine what they're doing
If you
now.
if you just remember this, you want to build undeniable proof. If you build undeniable proof. So what that consists of for me is first documenting as many examples as possible. This can happen manually. You can do this in code. So I'd say if you have an idea, if there's certain variables that you're looking for, you can do this for free, right? And it just costs you time. Just build a repository in Word, in Notion, in Excel, Google Drive of charts. And what you want to do, or what I like to do is I like to have that repository and either manually or with automation come away with stats, right? So the stats that I want to have is the average win rate, the average R&R, and from that I can tell my expectancy, right? If it's positive or negative. So the more charts, the better. Like the more scenarios or the more instances, the better. So starting there, that will help you give you a baseline, right? Okay, I'm looking at this setups, and without incorporating all the nuances, I'm looking at maybe like 65% win rate and maybe 1.5 R, right, on this particular setup. Now, once you have the baseline, you can start to peel back the onion and look at nuances. Okay, what was the news on this day? What was happening in the market, right? Those little nuances count. And with those nuances, you can start to differentiate your quality, right? The quality of the setup. If you have something like, maybe one setup, you have a pattern. If all things are equal, pattern, volume, order flow are equal on these two setups, maybe Trump tweeted something like, hey, it's a good time to buy on this one setup. And then you start to see how sentiment change because of Trump's tweet. And that's what actually helped drive that stock versus the other one where all things technical was the same, right? Those are the nuances that you start to get into. So I'd say process wise, write down your ideas, try to codify your variables, and don't start from scratch. In my opinion, there's a lot of great traders who share, like Kulamagi, Lance, the people are online, they're sharing their strategies. So start there, build out your data, gather data, that repository, write down your numbers, then get into the nuances. And you can start to grade a little bit later. Just keep everything the same, in my opinion, at first. And then you start to grade as you start to notice the nuances. And then my process I identify everything as a playbook. If something is invented, I call it an invented trade. So I have like ideas that are just kind of like ideas, and they don't have a name. They don't have a playbook name because I don't have data, right? So just call it invented play or a playbook trade until I have quantified the stats behind the setup. So once I have my playbooks written out and categorized, when it comes to the actual trading, I use a software. So you have TraderView. I use TradeZella, and in TradeZella there is a section where you can define your playbooks, and it may be the same in others. You define your playbooks. So every time I take a trade, I can tag my trades. So tagging is very important, right? So what I do on a daily basis, I walk through my journaling process. So actually, I started doing something neat at the beginning of this year. So in ChatGPT, I use ChatGPT. So ChatGPT, you can store your rules in chat. So you can say it has memory. So you can say, hey, remember these things about my trading. So throughout the day, like when I first start off, I say, hey, today is August 6th, and I'm starting my trading day. What is my focus for today? And I have one goal. I use Lance's DRC, right? His template where you have one goal and you focus on that goal and focus on following your plan. So throughout the day, I will journal and chat my emotions, what trades I took. I'll take screenshots of the chart. I'll take screenshots of my blotter, and I'll just upload it quickly to ChatGPT. And at the end of the day, I'll paste my DRC template, and ChatGPT will populate it for me. So the benefit of this is it makes it faster for me to keep a structured journaling, to keep structured journaling. So I always have the same inputs and I always have the same outputs. And I also will record myself. I use a screen recording software and I record all my trades. And then, so that's day to day. At the end of the week, I just give ChatGPT all of the journals from the days that throughout the week. I say, read these and help me understand what I need to work on. So, and this may be my engineering mind because I'm just using AI because it's meant to help us out, right? So, it'll scan through my PDFs, it'll scan through my blotter, and it'll point out, emotional things, psychological things. It'll suggest new rules, new things that I need to work on, or reinforce the good that happened throughout the week, and things that I need to work on. So I always have this running feedback loop, right? It's inputs, what happened, and then the outputs are, the results, and then I have some sort of analysis and feedback, like strategizing for the next week. And I just do the same thing at the monthly level. The monthly level, download my PDFs from TradeZilla, feed them to chat, and then it does a monthly analysis for me. And then I'll look at that month and I'll prepare for the next month based on what my performance. So the main indicators for me is performance-wise, or like, did I follow my plan? Like how far am I deviating from my plan? Is ChatGPT seeing a reoccurrence of me saying I didn't follow my rules, right? If I spot that, then I have to do something to prevent that, right? Oftentimes during the day, literally, I may be a geek, I don't know, but since ChatGPT knows my rules, I'll say, hey, I've already taken, let's say, like I've capped myself at, maybe I hit a daily goal, and I say, all right, I hit my daily goal. Should I keep trading? And Chat is kind of like, if you watch Iron Man, right? You have the AIs like, no, you already hit your daily goal, step away, right? So something geeky that I do, but I think the process is more important, right? Just you want to analyze everything, you want to capture as much data as possible, and then you want to review that data and make changes constantly.
Yeah. Thank you. I think that's really, really helpful. And I think that's one of the first instances we've heard of using AI to help traders with their process and their rules, maybe even on the weekends, but also in real time, like Jarvis for Iron Man.
Yeah. Like Jarvis, I couldn't remember. Yeah. Thanks a lot.
Yeah, absolutely. And if it's okay with you, Abdullah, I'd like to talk a little bit about what you're doing at ProfitX and how you're helping other traders. Can you talk a little bit about what you're doing with traders over there? And, while you're teaching them a lot, is there anything that they're teaching you and that you're realizing through some of them?
Yes. So what I'm doing at ProfitX, my company, is what I found is that there are a lot of courses out there, trading courses. And a lot of them provide videos on demand where you watch the videos and you have to try to apply what you learn by yourself. In some communities, there are great communities like IU. IU's a great community. I learned a lot about game planning from Nate and some other guys like Chris and Judah. So IU's a great community as well that provides a pod. What I wanted to add to that is helping the trader develop a personal roadmap and sitting with a person and analyzing where they are and creating a personalized step-by-step plan, right? So much of what I do on YouTube is free education, just trying to expose a lot of what I learned from SMB and the professional guys, right? That's why I bring on guys like Lance and others. And, I went to Traders for a Cause so I can meet some of the top stock traders so I can provide, professional knowledge to the guy that maybe like I was just kind of looking out, seeing YouTube, finding, the furus. So what I do on YouTube is just, free education, trying to provide as much as I can. Um, and within the company, if you join the community, it's all about taking a person, understanding what they know, and helping them develop a system, helping them develop a playbook, helping them do back testing properly. As they trade, helping them review their trading journals, do proper tagging, discover what they do well, right? So many of the traders that work with me, we'll do like a 20-day trading run. They develop their playbook. We do a 20-day trading run, and they're tagging. And as we look at their data, I'm helping point things out that they may not be able to see, right? So, hey, look, out of your 3 plays or setups that you trade this one very well, this one not so well, and you probably need to just put this other one on pause, right? So you may be flat or just a little bit above break even, and the majority of your negative P&L is coming from this one setup, right? So let's couch that one for now, and let's put more energy into these 2. That one that's working very well, maybe you size it up. The one that is not doing so well, let's figure out how we can boost the win rate, right? And tweak the variables. So most of what I'm doing is for free on YouTube, trying to, pass along the professional knowledge that I've learned. And inside the community is providing, personalized roadmap, personalized review, and a trading pod. Like we trade live together in the pod as well. So I've learned that once a trader has proper edge and they know what to do, the second mountain is doing it. I know, as cliche as it sounds, it's like certain people have the same playbook. Like there's certain people in our community that have the same exact playbook, same setups, but everyone has their own unique challenges, right? One person's second mountain may be greed or FOMO, in the instance of like holding on too long or trying to, scale in too fast. Another person may need to size up, but they're very conservative, so what being in a pod, providing this type of service helped me see is you can't underestimate how much work it takes for you to digest the knowledge and execute. So when Mike Bellafiore and others say that it's like being like a professional athlete, it really is. Like getting in the reps. You see the guys that put in a lot of reps on the weekend. You see how they're in the trades faster. Their equity curve is proving it, right? Versus those that may not. They may know, but they may not put in the extra work. So when you hear about some of the, prop traders talk about working in the after hours, working on the weekend, that's real. That's real. I'm getting better. Like each month for 2025 has just been better and better, but I've had to put a lot of work in to make that happen. So while there is a knowledge component, trading is very much a skill, like a professional sport that you have to get better at. Shaving off seconds by using like hotkeys, I got the Elgato Stream Deck so I can program these different hotkeys. Instead of using two fingers, just using one, just all these little micro improvements that you can add to the game helps out.
And I like that you bring up the importance of executing. You can have all the edge, but at some point, everybody's got to execute it. And, the other part of that is everybody might have different challenges that they face that kind of get in the way of them being able to execute as well as they can. So yeah, absolutely. I think that's really helpful to hear. And you brought up, your free content on YouTube. So, I wanted to talk a little bit about that because I think it's a tremendous resource for aspiring, developing traders out there to go look at. You've along those lines been able to interview some outstanding traders. One of the ones that we have in common is, Lance, phenomenal trader, the people's champ. So, from speaking to great traders, what are some of the lessons that you've learned along the way that maybe you've even been able to incorporate into your trading?
So I think there's three things that stick out for me. One that I learned from Lance is the importance of studying the biggest moves, you know. So I find personally that I have eaten, I'm sure this is for everyone, when I stock selection, when I'm in the right stock, one that is running, you know, multiple cents or maybe dollars, it's just easier. You know, it's easier to make money during those times. And when I'm trading chop, it's just harder, right? You're losing money. And I think many people underestimate the work that goes into selection, right? You can just show up and, you know, look at the top 10% gainers and gappers, but I don't think that alone will help you land within the right tickers. So when he talks about like reverse engineering some of the craziest moves, that's true. Like if you go back and look at some of the craziest moves that happened over the last 5 years, you will see common traits. And it's the ability to see those historically and then recognize them in real time. If you can do that, those will lead to some of the absolute best trades. And that's been the, you know, I've had the best trades and the largest trades when I've been able to step into the right moment and witness trade those stocks. Like he tweeted out the other day, he's like, people are complaining about edge. Like, you know, the market, there's no more edge in the market. And he pointed out the fact that, you know, IPOs have been working the same way for like the last 15 years. And we just recently had some crazy IPOs, right, this year. So, you know, just reverse engineering some of the best moves. That's big. I know sometimes we come into trading and there are people that sell us this dream, like, hey, all you have to do is, you know, keep it simple. You don't want to do too much. But what I heard from Lance is like, no, you need to be as detailed as possible, be as nuanced as possible when you're doing your write-ups, when you're doing your reverse engineering. And I found that has made me have a lot more insight, a lot more depth and understanding, and has given me the ability to be more creative, right? So I'd say reverse engineering, the best setups is one thing. Secondly, what I've learned from some of the other, like another trader, is I think he told me that he put in like, you know, a gazillion reps, right, with his best setup, and oftentimes how trading a mediocre setup extremely well is better than trading a good setup in a poor way, right? So like if there is a setup that you have, man, you almost want to like, you want to take that setup in the sim, like using something like tradingsim.com, one of those replay tools. You want to do that thing you want to replay that as many times as possible. Because a lot of these easy money trades that I take, the difference between, you know, $1 million day, if the liquidity's there, right? If the liquidity's there, $1 million day or $100,000 day, you know, your first 10K day, it's all just your own pattern recognition and confidence, right? So when I took that $100 to $1,000 and eventually had a 10K trade and eventually had a 25K trade, the differences there were just my own conviction. You know, I had seen certain setups, these tight ranges and breakouts. Like if you listen to Kulamagi, like if he's like, yeah, I made millions on top of millions from these basic setups. Yeah, it's just, if you can get really good at a setup, and I mean, you just know it, like you know it like the back of your hand, and you know how the price looks, you know how the tape looks. You become really good at it. That's really that's going to make the difference between, you know, you making career out of this and you having to close a shop and do something else. And the third thing is, I would say, is the comparison game. You know, looking at X and IG and watching everyone else, I don't think, to a certain degree, it's good, but you have to compete with yourself in a way, right? If you're getting better, Like there's guys I've been trading for going on 6 years, and my detour through Forex and futures, I believe if I would have started with stocks, I'd be a lot further. So I look at some of the guys like, hey, I just hit my first 3 million, and I crossed 3 million in profits, or I crossed 5 million in profits, and I'm only 5 years in. I look at that, and initially, I can get down on myself, right? But if I just take a step back and look at where I came from, right? I was working an engineering job, and I hated it. I was in the meetings just kind of falling asleep, but now I've been able to, um, you know, exit that, make good enough money to, take my family traveling and take care of my kids and take care of my wife. And then also I've met great people like yourself, Anthony, and, really good traders, and I can go to traders for calls and travel. I may not be an 8-figure trader yet, but I'm continuously getting better and better. And that's what's important, right? So I think those are the three things that really I'd say stick out. Maybe a fourth would be sizing. Uh, it's hard to conceptualize, but after you have a certain amount of data, you do see that if you size up what you do well, then those trades will make up the majority of your P&L. So I have my day-to-day base hits, but there are some trades, some ideas that are worth it. Like they're worth you sizing up 5x, maybe 10x, maybe even more, because they just have so much more higher expectancy than the rest of your playbook. So just to wrap that, yeah, just to wrap that up, I think the biggest traders, they are a lot bigger than others because they have that A plus, they have those A setups, and they're willing to size, and they have the confidence to size. So getting to that point is what's going to help us all trade bigger and have more profits. It's because they have that A plus, they have those A setups, and they're willing to size, and they have the confidence to size. So getting to that point is what's going to help us all trade bigger and have more profits.
Yeah, thank you so much. I think those are really, really key takeaways from, having spent time speaking with exceptional, market wizard level
Mm-hmm.
traders and doing the work to understand what makes them so unique and so profitable and ahead of their peers in this trading game. So I really appreciate you, sharing those findings and that with the audience. And Abdullah, if it's okay with you, I'd love to finish our episode with a lightning round set of questions, pretty quick questions, pretty quick answers. Is that okay?
Yes, let's do it.
Awesome. The first question that I have is, what would you consider to be your greatest strength as a trader?
My greatest strength would be discipline. So if I decide that I'm going to do something, or I'm not, then I will not. If I decide that I'm going to do something, then I'll do it, regardless of how I feel, uh, regardless of emotions that come in. And this often helps me out. So if I have rules, I follow them to the T, or as much as I can. Typically, if I say I'm going to stop trading, if I have a daily stop, I have the discipline to uh, to 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 follow it. So I think discipline is one thing that has really helped me out in a big way.
Is there anything that you're working on in 2025 to improve your trading?
Yeah, I'd like to. Uh, I am working on my swing playbook. So because I've been trading for enough time to see to understand how news, like macro news, how fundamentals may impact the company. Since I'm always watching the higher time frame, um, even though I love to scalp, I love lower time frame trading. I love momentum trading. I love continuation on the lower time frame. Um, I see I can see a lot of setups that I'm leaving on the table. So I want to become more diverse and add a swing element, more and more of it. I'm already doing it, but just add more of it. So add more size, swing, have a core position, and do more scalping. But while I let that core position run, that's one thing that I like to do for 2025, like going into 2026.
I know you love to read. So if you had to choose maybe 2 or 3 books for traders out there that you think would be beneficial, either newer traders or even veteran traders, maybe to reread? What 2 or 3 books might you recommend to them?
I definitely will say the top three for me would be One Good Trade. I think that this book encapsulates what it takes to be a professional trader. I don't think any other book encapsulates it all in one book. That would be one. The second one would be the Playbook by Mike Bellafiore, because for me, there's 4 pillars: a playbook, risk management, mindset, and execution. The most important to me is playbook, like having an edge. So in the book, he describes how to build a system. It's very, it's like a textbook, so it could become a little, it seemingly mundane just because it's like a textbook. But if you could just make your way through like the first few chapters, you'll see what I mean. Because from there, you can build a system, a swing, scalping, move to move, intraday. So many components that a lot of the professional traders use, he outlines there, and he gives case studies as well. And then I would say the third book if you wanted to, for technicals would be technical analysis using multiple timeframes. I think that right there helped me from a technical analysis perspective. So One Good Trade, the Playbook is more high level, how to build a system, what it takes to be a professional. And then technical analysis using multiple timeframes was more detailed about chart reading and using volume, the different phases of the market, accumulation, like understanding the accumulation process, understanding the distribution process. And I think that was the first place where I understood those different dynamics. So yeah, those would be like the top 3. If I had one related psychology book, I'd say The Best Loser Wins by Tom Hogarth. Yeah, he discusses how to lose, which is as you know, is very important.
Absolutely. And just to echo that real quick, if anybody listening has not already read One Good Trade or The Playbook by Mike Bellafiore, highly recommend that. Do yourself a favor and go get that. And Best Loser Wins as well. All phenomenal books. For anybody listening who's considering eval or sim accounts to maybe get started, maybe they don't have, the 25,000 to get over the pattern day trader rule. We're recording this in August 2025. So if they don't have the 25,000, they're considering eval. What advice would you give to them about that?
I would say just 3 pieces of advice. And I'll say 3 a lot. So 3 pieces of advice. First would be to go with a reputable company. That's one. There are several companies where I was denied payouts. So it's important to find, though the more reputable companies may cost more, but typically you're paying for the assurance, right? So if you're going to take time to pass the challenge, you may take a few months actually, especially in the beginning, to pass those challenges and work your way up to a payout. You don't want your hard work to go down the drain. So I'd say look for reputable companies who've been around, who are, like your top steps. I don't want to shout any companies out, but certain companies that have been around, you want to ensure that they're reputable. Second thing is try to just work, build your system in the demo first before you pay for the sim accounts. Or if you pay for one sim account, use that as your demo. Many traders get stuck in the cycle of chasing the dream, chasing payouts. I know so many people that have obliterated their capital because it's like the casino. Like you are promised like the fact that you can trade with big capital, and you start to calculate, if I get this account, then like may say, if I get 1,000 or if I get, $1 million in capital and, just 2% of that or just 5% of that, I can make money. But before making any money at all, you have to have a system and you have to prove it. So go through those steps that we talked about in this episode before, risking money. You can't gamble your way to consistent payouts. It's impossible. There's some people that do it. So you do have, outliers, but that isn't the norm. And then the last piece of advice is just want to make everybody aware of something that happens in the eval influencer space. So you have to make sure that you are learning a consistent strategy, because one thing that happens is they will blow accounts, and I think there's a guy now, it's come out that, he was blowing like thousands of accounts, or maybe like 500 to 1,000 accounts, and he's just showing his profits. So there is an edge there where you can pay for accounts, you blow those accounts, and you get some of those accounts in the funded stage. And then whenever there's edge, they trade those accounts, and they make payouts. And if they make more than what they paid in, then, they're profitable. But if you're learning from someone like that, they won't tell you that the strategy requires that you blow accounts. Like, that's not, so you're learning a strategy. So what happens is people come, they talk to me, they say, hey, look, I learned this strategy. I'm learning from such and such, and it looks like they're profitable. But I'm saying, hey, this guy is blowing X amount of accounts. That's a part of the strategy. So you have to be willing to blow accounts and get these accounts to the funded stage, and you trade those funded accounts when you have edge, right? So just make sure that you're not getting caught in that. That's happening a lot. And it's something that's hard for beginners to even know about. I only know about it because I was in that space, and I know many of the people. So just make sure you have a system. Don't spend too much money until you have a system. Get a payout and use that payout to fund more accounts. And just know that a lot of stuff that you see online, some of that stuff is not real. Some of that stuff is just kind of like smoke and mirrors. So
for anybody listening who has a 9 to 5 and they're thinking about quitting so that they can trade full time, what advice would you give to them?
My advice would be so if you have a 9 to 5, I would invest in quality education. The most expensive education that I paid for in the beginning was from S&B Capital, and it was worth it. I would have never learned some of the things that I learned if I would have tried to do things on my own, right? So get with someone like S&B, get with someone like IU, get with someone like Lance, get with someone like myself, like people that reputable companies, reputable traders. You want to find those traders and just make the investment. Trust me, it'll cut down your learning curve. It'll cut down some of the time some of the errors that you will experience. And I do that first. Invest in the education while you have the money. And secondly, I wouldn't try to quit my job so soon. Like, the job it's sort of like I read in a book called The Wealthy Gardener. And he talked about how you look at your job and where you are now as something you want to break out of. But the job is actually going to be the thing that facilitates your way to full-time trading, right? So, keep your job, save up your money, learn, get the education, build a track record. When you have a track record, put some more money on your accounts, try to generate as much money as you can while you're trading. Have a safety net, because if you go out if you jump ship too fast and you don't have a safety net, then it's going to impact your trading. So pace yourself. And when you get good, you'll know it. When you get good, you're going to make money. So just focus on the skill. Yeah, that's what I say. Focus on the skill in the beginning. Mastery.
And for everybody listening who would like to learn more about you or maybe even contact you, how can they do so?
Yeah, so you can contact me you can go to YouTube. There's a link in my videos in the description. You can contact me on IG or even X. I'm on X as well. So I think that Anthony will share the links with you. But the majority of my content is on YouTube. A lot of videos. If you're a beginner, I have a lot of nuggets there on YouTube for you to watch. So that'll be the main place I go to contact and check me out.
Absolutely. If you aren't already subscribed to Abdullah's YouTube channel, I highly recommend doing it. And Abdullah, thank you so much for coming on the show and sharing your trading journey with myself and the audience. I really, really appreciate it.
Thank you so much, Anthony. I really appreciate it. It's an honor. And yeah, man, I loved it. You're a great host and look forward to seeing the episode when it comes out.
We hope you enjoyed this episode of The Trader's Journey. We have additional episodes we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they're available. Thanks for tuning in.